Welcome back to Stocklabs for another market recap. It is 4th of July weekend, so happy 4th of July to everyone. And the first half of the trading year is in the books, basically. We're in the second half, so I know it seems like kind of flew by, kind of the midpoint of the year already, but at the same time, for some, it might seem like it's gone by really slow because, you watch positions more or less get pulverized week after week, and the way it drags on feels like, it's just been going on forever, which, I mean, for this sort of action to last this deep into the year, it's not something you see often. So, as far as our weekly performance of the indices, Dow down 1.5%, IWM down 2%, S&P down almost 2.5%, Q's down 4.4%. Pretty bad week. We started the week with, at least in the S&P, more or less 4 days down, giving everything back from the prior week, and then Friday, there's sort of a short covering bounce, across most of the indices and sectors, which made these performances look a little less terrible than what they were. But we've seen sort of anytime we get a strong week, which has not been that often, and especially on, we get a strong Friday or something, the market more or less gives it all back the following week, basically right away, which happened this week, first couple of days of the week, and then kind of chopped around some lows, saw a little bit of short covering to end the week, and that was it. There's no, there's no real buying, it would seem, in this market. So, if we look at our leadership stocks, it's kind of the same story with them, except they got bludgeoned pretty bad this week. NVIDIA down 15%. Bad week for them. Google down 8%. At the start of the year, Google was hanging in tougher than some of these other ones, but now it's kind of just trading the same way. It had its knees chopped out from under it, and it hasn't been too constructive. Tesla down 7.7%, Amazon down 6%, Netflix down 6%. Netflix started sort of this longer term downtrend before all these other ones, if I remember correctly, and hasn't improved really. I mean, it's 180, but that's still pretty poor given where it was. Microsoft down 3% and Apple down 2%. I guess you'd call them outperformers, given that the NASDAQ overall was down 4.4, but still nothing to be too excited about. From a breadth perspective on the via the sectors of the market, utilities, big outperformer this week, up almost 4% on a median basis. That really sticks out. This utility trade is kind of wrapped up with, you see bond yields starting to think about maybe they're going to come in a little bit as the narrative sort of shifts from the inflation story, which is still, more or less front and center, but the inflation story is starting to be in the very early stages of giving way to maybe a outright recession story. So when bond yields start to reflect that sort of thing, you see the type of stocks that they like lower bond yields, they might react first. With utilities, there's basically steady dividend payers. They're not gonna, presumably they're not gonna be that affected by, economic growth too much. I mean, people pay their utility bills, right? And they pay a little bit of yield. So as long as the yields on government bonds aren't blowing out, then the equity on these utility stocks becomes a little more attractive. So, maybe you're seeing a little bit of you're seeing some of this mentality reflected in the tape, at least this week. Everything else basically down across the board. Technology down 4%, services 3%, consumer down 3%, and basic materials down 2%. So basic materials last month plus, at least for the equities of basic materials, has been pretty poor. This also would tie in a bit with, if you're seeing an actual, if you're pricing in the possibility or reality of an actual recession, then it doesn't quite matter so much where the raw commodity prices are, because the stocks are going to reflect the demand destruction before the physical market does. So yeah, that's that. Pretty poor on this. And for subsectors, okay, we don't have any that are up 5%, but you see the top four are all utility sectors. Not too much to be excited about. Actually, it's pretty. You might consider that more of a bearish rotation than even seeing more stuff just down. I don't know, because the specter of recession is it's what people are scared of the most. Last 12 years or 15 years, whatever. The word recession just gets people all triggered. As for downside, okay, EVs down 4%, department stores, retailers down big too. A lot of semiconductor subsectors on here. So we saw NVIDIA on the majors down 15%, but it was kind of across the board. A lot of different semiconductor groups getting hit. Semi's been really bad. Even they've kind of been worse than tech overall, is my impression. And let me just check. Okay, yeah, year to date. So down 36% year to date, at least for SMH, versus the Qs, which are down, I don't know, let's call it 30%, 27%, something 30, whatever. This is worse though. Go back. Okay, I was trying to go back, but it wasn't. Yeah, so pretty poor from semiconductors overall. Everything else kind of, let's see. Okay, 25 sectors down 5%. What is this? Another, okay, 35 sectors. 35 sectors down 5% on median basis. Not a single one up, more than 5%. So bearish flows as far as sectors go. And then if we look at sort of our breadth by market cap, 1 to 5 billion down 2.5%. 5 to 10 billion down 2.2. 10 to 50, okay, down 2. So a lot of down 2%. See across the board. 50 to 100 billion, okay, down 1%, a little bit stronger. And 100 billion plus market caps, this should be worse. Yeah, down 2%. So in line with everything else. So basically everything down 2.5%, with the exception of 50 to 100 billion cap, only down 1%. So not too many conclusions to draw from the sectors. Selling was pretty uniform across market caps and across industries, with the exception of utilities that were actually green, and were quite strong. If we look at intelligence for this week, what do we have? Okay, crude oil should bounce. I know that crude oil trade's been gotten pretty volatile, but maybe you see bounces. Maybe you see a bounce this week. Biotech, bear biotech. So I know biotech's hung in a little stronger than maybe what you'd expect. At least in the last, let's say in the last week, because let's face it, biotech's been terrible for a year and a half or something almost. But yeah, but this week, yeah, it's going to go back to what it was doing. Maybe retrace some of the rally that it saw. Some of the most recent rally that it saw. Let's call it that. Okay, and then this ETF here, what is this? I have no idea. Something with diversified and yield. So this probably has holdings similar to utilities plus other dividend payer type stocks, which if those are going to be the ones that are at least they're not gonna blow you up, right? That's what people are looking for. Just give me stock, give me holdings that I can stomach holding. They pay me a little every quarter, and I can just wait it out. But then we have MLPs, a couple MLP funds, robotics, another energy, short treasuries. I mean, if short treasuries works this week, then you're going to see the market get hit hard, most likely, because then it would sort of be. I mean, we know there's no growth story, so that means if there's no economic growth story, so we know if yields go up, it's inflation fears, and if that gets stockpiled on top of recession fears, I mean, just put it together, and it's easy to see that market would be in big trouble in those conditions. Okay, we have short Russell here. And whatever this is, some sort of Credit Suisse chicanery with crude oil, which I'm not even going to look into what it is. Then if we look at the inverse of this, more or less, let's resort the list. Okay, Chinese real estate bearish. Could be interesting trade. I don't know. I've seen headlines about China's coming back online and all this stuff like that, but who really knows no one ever really knows what's going on with China. You kind of just have to, read the proverbial tea leaves, the Chinese tea leaves, for trying to take a guess at what's going on over there. But anyway, Chinese real estate rated bearish this week. Okay, nickel, for all the nickel traders out there, bearish. Cloud computing bear ETF is bearish, which bullish. Okay, bullish SaaS, that would be interesting. I'll have to keep an eye on that. Bearish biotech, which pairs up with the bullish LABD from the other side of the screen. High beta bearish. So this is a lot of, regional banks, oil and gas stuff, which, we had the oil and gas that was rated bullish, but, that sector has sort of traded independently from a lot of the market for most of the year. And then specifically energy bear is bearish, so bullish energy. Okay, so, whatever let's call it high beta X energy is bearish. And then nail, so the homies bearish. I know housing is kind of, those stories are starting to come around. Housing's cooling, mortgage applications down, whatever, all the stuff that you sort of remember from the last debacle. It's kind of playing out again. I mean, obviously not to the severity that it was in 2008 and 9 back then, but that's what people price in when you start seeing, there's not people lining up out the door to buy houses blind anymore. I mean, I'm sure there still are, but it's not as intense as it was even 2 months ago, probably. So, home builders have been getting pretty shaky. As far as the overall market, we had almost an oversold signal this week on after kind of the big whoosh down in the middle of the week, but didn't quite get there. And then kind of this oscillator more or less reset just on Friday's move alone. So really not good from sort of a technical standpoint as far as the way Stocklabs evaluates the market. We'll just have to see how it plays out. It's going to be a short week this week. Everyone's off Monday for the holiday. So, again, happy 4th of July. Enjoy the barbecues, all the food, whatever company you surround yourself with. So, that should be fun. And then be back for short 4-day trading week to see if see how the second half is really going to start. But yeah, thanks for tuning in. Thanks for watching all this stuff. Basically all year so far, and we'll keep it up in the second half. Try and make sense of what's going on, and hopefully you guys are gonna make it all through to the other side with us. So, good luck this week. Enjoy the weekend. Talk to you later.